In the high-stakes world of biotech investing, let's be honest, fortunes are made and lost not just in a lab, but in the halls of Washington, D.C. A single regulatory signature can turn a promising compound into a billion-dollar blockbuster or into dust. And right now, we're staring at a seismic shift, one that could rock the very foundations of the metabolic health market. It's a story with giants, rebels, and a major political wildcard who could change absolutely everything.
Okay, let's really unpack this quote because it sets the entire stage. We are not just talking about some new wellness fad here. What this is really about is a direct assault on one of the most profitable, most heavily defended monopolies in the entire pharmaceutical industry. That biotech moat they're talking about, that's the impenetrable wall that big companies build around their products. And we're looking at a situation where the government itself might start handing out shovels to the competition. This is where policy, profit, and power all collide. All right, so here's how we're going to break this all down. First, we'll look at the current kings of the hill and just how big their kingdom is. Then we'll dive into the rebellion that's challenging their rule. After that, we'll get into the regulatory battle that's about to explode, clear up some really dangerous myths for investors, and finally get to the good part, where the real opportunity, the real alpha, might actually be hiding. Okay, let's dive right in. To really get what's about to happen, you first have to appreciate the sheer scale of the empire we're talking about. The world of metabolic health has been completely upended in just a few short years.
So you've got these absolute titans, right? Eli Lilly and Novo Nordisk. Their drugs, Ozempic, Wegovy, Mounjaro, you hear about them everywhere. They're generating tens of billions of dollars, treating conditions like diabetes and obesity that affect, get this, over 1 billion people on the planet. This insane success has built what investors call an economic moat. Think of it like a medieval fortress with sky-high walls protected by patents, massive factories, and brand names everyone knows. It seems totally untouchable.
But here's the kicker. Every fortress, no matter how imposing, has a weak spot. And in this story, that vulnerability wasn't found by another pharma giant with a bigger army. No, it was exploited by a scrappy, kinda legally questionable rebellion that found a tiny crack in those massive walls. And that brings us to the gray market rebellion. We're now talking about a whole parallel economy for drugs, one that operates in the shadows of the official FDA system. And thanks to massive drug shortages and just explosive demand, this market hasn't just survived, it has absolutely boomed.
So what is a compounding pharmacy anyway? Well, in the simplest terms, they're pharmacists who can mix ingredients from scratch to create a custom medication for one specific patient. Maybe you're allergic to a dye in a normal pill, for example. But here's the critical part. These drugs are not FDA approved. And there's a loophole, a big one, that lets them make versions of commercial drugs during an official shortage. And that loophole is what blew the doors wide open for compounded GLP-1s. And this is where the battle lines are really drawn. You've got Novo Nordisk and Eli Lilly suing everyone in sight, calling it illegal sham compounding. They're accusing these telehealth companies of tricking patients and putting them in danger. But on the other side, you have companies like Hims & Hers saying, hey, hold on, we're just providing personalized dose tailoring and meeting a crazy demand that Big Pharma couldn't keep up with.
Okay, so you have this tense standoff, this Cold War, but it is about to turn scorching hot. There's a huge regulatory event on the horizon that could act as a catalyst, potentially validating the entire gray market model and giving them a whole new arsenal of products. It could literally rewrite the rules of the game. Let's just walk through how we got here. In 2023, the FDA came down hard. They banned a bunch of popular peptides from being used in compounding, saying they were worried about safety. Then, the political landscape shifts. RFK Jr. is appointed to run Health and Human Services, which is the FDA's boss. And this is a big deal because he's been very publicly critical of the pharma industry. So now, every single eye is on July 2026. That's when an FDA committee is going to reconsider that exact ban, a move that a lot of people think is happening because of the new leadership.
Now, these names might just look like alphabet soup to most of us. BPC 157, ipamorelin, what are they? Well, in the world of biohacking and athletics, these are game changers. People use them for things like rapid injury healing or for their anti-aging properties. Now, the big issue for the FDA is the lack of huge clinical trials. But just imagine if the ban gets lifted. The gray market could suddenly offer a whole menu of these things right alongside GLP-1s. That would be a powerful, powerful combo.
And you guessed it, this is hugely controversial. On one side, you have advocacy groups like Public Citizen basically screaming that the FDA is bowing to pseudoscience and that this is all just political pressure. They say there's no new science to justify changing the rules.
The FDA, on the other hand, is just saying, hey, we're just getting some independent expert advice. But you know what? For an investor, the why it's happening almost doesn't matter as much as the what happens next. All right, so whenever you have this much disruption and this much hype, you also get a ton of misinformation. So before we even talk about opportunity, we have to walk through a dangerous minefield of investor traps. This is where people get hurt, chasing headlines without doing their homework.
Myth number 1, and please hear this. A compounded drug is not a generic. It is just not the same thing, not even close. A real generic drug has been through grueling FDA testing to prove it's the same as the brand name. A compounded drug, by its very definition, it's unapproved. It has zero of that scrutiny for safety or for whether it even works. It's a completely different legal and medical universe.
Next up, the siren song of the penny stock. Oh, you're gonna see them. Tiny little companies with flashy press releases about the next big peptide. But let's call it what it is. It's not investing, it's gambling. You're buying a lottery ticket based on only potential, only hope, not a real business. And the odds are massively stacked against you.
And finally, there's this really dangerous myth of a patent safe harbor. This is the idea that because compounding is legal in some cases, it's a free-for-all and patents don't matter. Wrong. So wrong. Big Pharma has bottomless pockets and armies of lawyers. They will sue you into oblivion for patent infringement. A small pharmacy doesn't stand a chance in that fight. It's not a fight, it's an execution.
So, we've navigated the minefield, we understand the players, we see the battleground. Now for the million-dollar question. How do you actually find an edge here? Where's the real defensible investment in all this chaos?
So think about it for a second. If the little startups are lottery tickets, and the compounders are walking on a legal tightrope just waiting for the next lawsuit, where does that leave a smart investor? It really feels like all the obvious plays are designed to lose you money.
And here it is. This is the core idea. The real alpha isn't about picking one of these little guys to win the race. It's about playing the consequences of the race itself. The opportunity is in two key places: the volatility, the wild price swings this chaos creates, and in the void, the brand new markets that are opening up because of all this change.
And you want to see that volatility in action? Look at this. 35%. That's how much the stock of Hims and Hers dropped in a single day when a key partnership got pulled. That is the fragility we're talking about. These companies live and die by headlines. But for a sophisticated trader, that predictable chaos, those swings, well, that can be a huge opportunity.
Okay, so that's volatility. Now what about the void? Well, millions of people are taking these GLP-1 drugs for weight loss, and that's creating massive new problems that need solving. For instance, rapid weight loss can weaken your bones. All of a sudden, you have a booming multi-billion-dollar market for osteoporosis treatments. Another void? The delivery method. Nobody likes injections. The absolute holy grail is an effective pill, an oral delivery platform.
And this is the brutal truth of the whole thing. The smartest, most durable investments here probably aren't the flashy ones you see in the headlines. The real play is in the picks and shovels of this gold rush. It's the companies with proven oral delivery tech, and the companies solving these massive side effect problems. I mean, osteoporosis affects 200 million women. That isn't a fad. That's a fundamental long-term market that's only going to get bigger. Which brings us to our final question. The rules of the game are being rewritten right before our eyes. And the biggest takeaway here is that the most obvious investment is almost never the best one. The real alpha is usually hiding 1 or 2 steps away from the main event. It's about looking past the hype at the second-order effects, the volatility and the void. So, as the dust settles, the question for you is, are you positioned to play the whole board, or are you just staring at the king?